How to select stocks. Investing in the stock market can be a highly rewarding endeavor, but it also comes with its challenges. For many aspiring investors, the primary hurdle is figuring out how to select the right stocks. With thousands of companies to choose from, making informed decisions can seem daunting. This video aims to simplify the process by focusing on 3 critical factors: researching company financials, considering industry trends, and identifying competitive advantages. By the end of this video, you'll have a clearer understanding of how to make sound investment choices and feel more confident in building your portfolio. Research company financials. The first step in selecting stocks is to thoroughly research a company's financial health. This involves examining financial statements such as the balance sheet, income statement, and cash flow statement. Analyzing these documents can provide invaluable insights into a company's operations, profitability, and overall financial stability. Here are 2 examples to illustrate the importance of financial research. Example 1, Apple Inc. AAPL. Apple is a prime example of a company with strong financials. By reviewing their financial statements, investors can see a consistent increase in revenue and profit margins over the years. Apple's balance sheet shows significant cash reserves, minimal debt, and robust cash flow, all indicators of financial stability. Such financial strength not only supports ongoing operations and innovation but also provides a cushion during economic downturns. Moreover, Apple's financial performance is supported by its diversified product line, ranging from iPhones to services like Apple Music, contributing to a stable and recurring revenue stream. Example 2, Tesla Inc. TSLA. Tesla's financial journey has been more volatile, yet insightful. Early financial statements revealed substantial debts and fluctuating profitability. However, a deep dive into their recent financials shows a turnaround with increasing revenue, improved profit margins, and a stronger balance sheet. Understanding these financial trends helps investors gauge the risk and potential reward of investing in Tesla. Tesla's growing revenue from its electric vehicle segment and energy products indicates an expanding market presence, while improved margins suggest operational efficiencies and cost management. Consider industry trends. Beyond individual company analysis, it's crucial to understand the broader industry trends that can impact a stock's performance. Industry dynamics can significantly influence a company's growth potential and profitability. By staying informed about industry trends, investors can position themselves to capitalize on emerging opportunities and avoid sectors facing headwinds. Example 1, renewable energy sector. Investing in companies within the renewable energy sector, such as NextEra Energy, NE, can be promising given the global shift towards sustainable energy sources. By examining industry reports and trends, investors can identify companies poised to benefit from governmental policies and increasing consumer demand for clean energy. NextEra Energy, for example, has invested heavily in wind and solar projects, positioning itself as a leader in the transition to green energy. The growing emphasis on environmental, social, and governance (ESG) criteria by institutional investors further supports the sector's growth prospects. Example 2, technology sector. The rapid advancement in technology makes this sector particularly dynamic. Companies like NVIDIA, NVDA, have thrived by staying at the forefront of industry trends such as artificial intelligence and high-performance computing. NVIDIA's development of GPUs has revolutionized gaming, data centers, and AI, creating substantial growth opportunities. Analyzing industry trends helps investors understand the potential growth areas and the companies leading these innovations. For instance, the increasing adoption of AI across various industries drives demand for NVIDIA's products, highlighting the importance of being attuned to technological advancements. Look for competitive advantages. Identifying companies with a sustainable competitive advantage is crucial for long-term investment success. These advantages can come in various forms, such as brand strength, proprietary technology, or cost leadership. Companies with strong competitive advantages are better positioned to maintain market share and profitability, even in challenging economic conditions. Example 1, Coca-Cola, Co. Coca-Cola's enduring competitive advantage lies in its strong global brand and extensive distribution network. The brand's universal recognition and customer loyalty enable it to maintain a dominant market position. This brand equity translates into stable revenue streams and a reliable dividend for investors. Coca-Cola's extensive distribution network ensures its products are available in over 200 countries, providing a significant barrier to entry for competitors. Additionally, the company's diverse product portfolio, including beverages like Diet Coke and Minute Maid, caters to a wide range of consumer preferences. Example 2. Amazon, AMZN. Amazon's competitive advantage is driven by its vast logistics network and dominance in the e-commerce space. Their focus on customer service, technological innovation, and a diverse product range has created significant barriers to entry for competitors. Additionally, Amazon Web Services, Oz, adds a high-margin revenue stream, reinforcing the company's market position. Amazon's Prime membership program enhances customer loyalty and generates recurring revenue, while AWS's cloud computing services cater to a broad spectrum of clients, from startups to large enterprises, further diversifying Amazon's revenue streams. Conclusion: selecting the right stocks involves a combination of thorough financial analysis, understanding industry trends, and identifying companies with strong competitive advantages. By applying these principles, you can make more informed investment decisions and build a robust portfolio. Remember, successful investing is not about chasing quick gains but about making informed choices based on solid research and strategic insight. Start your research today, and take the first step towards achieving your financial goals. By staying disciplined and focused on these key factors, you can navigate the complexities of the stock market and enhance your potential for long-term success. Happy trading!